So let's go ahead and get started. I've got 12:01 on my clock. Today we are discussing Alternative Investing 101. And so we'll just be kind of going over a high level of who we are at New Direction, what alternative investing is, and then how you can do it through us. Again, for anybody who joined late, please ask your questions in chat and I will answer them at the end. So again, we do have to disclose our safe harbor statement. New Direction does not provide investment advice or endorse any products. We are not the agent for any investment provider nor investment. This is for informational purposes only. This is not an advice, so this is just kind of to inform people. New Direction is a non-fiduciary custodian, so we do not offer any investment advice, nor do we offer any investments ourselves. We simply facilitate what you want to do. And doing the presentation today, my name is Colin Kennedy. I'm a business development specialist here with New Direction Trust Company. I've been here actually a little closer to 2.5 years, but here on the business development team, I help clients understand their self-directed options and help them open, manage their new accounts. That includes their first account and setting up their first investments. If you open an account with us, you will likely work with myself or somebody on my team for that initial onboarding. So who are we at New Direction, other than a non-fiduciary custodian? Simply put, we are the custodian for self-directed tax-advantaged accounts. These include IRAs, both traditional Roth. There are also employer plans like a SEP IRA or a solo 401k. We also allow health savings accounts, and then Coverdell education savings accounts as well. And you can think of us like a bank where we hold your account and make it easy for you to manage your investment. But again, we do not provide advice or specific investment opportunities. A little bit more about us is that we are currently celebrating 20 years. We were established in 2003, and we are industry leaders with experience in customer service. And we are fully self-owned, so we are not at the control of a larger bank or anything else like that. We also have a heavy focus on digital innovation. And again, you can see here what kind of assets we have, over 10,000 with 50,000 accounts and 3 billion in cash and assets. What is self-direction? Essentially, that means you choose your investments. Instead of having somebody at a brokerage firm put you into a different group of stocks and bonds that they see fit and often take a commission off of them, we simply facilitate the investments that you want to make. In fact, a lot of people don't know that the IRS allows you to make a much broader range of investments that you can diversify your portfolio with. And we'll be getting into that a little more in just a moment. How we do it is through a combination of human power and digital innovation. We try and make our client portal as simple as possible for you and direct all your investments on your own. We've also got a dedicated team of client success individuals, such as myself, to help you with your investments, answer how to, and help facilitate your goals. So what are alternative assets? Simply put, alternative assets are outside of the traditional brokerage firm offerings of stocks, bonds, mutual funds, that sort of thing. These can include real estate, precious metals, private equity, private lending, agriculture options, energy options, local businesses. Really, the main restrictions are what the IRS prohibits, and that's things like life insurance policies and collectibles. So how can my account invest? Your account can invest as an outright owner of assets, as a partner, as a lender, as an equity shareholder, or even as a crowdfunder. So this is important if we get into some of these other assets, especially real estate, which will be next. If you're wondering, well, I only have 20,000 in my account. Am I able to do this kind of asset? Well, the answer is generally yes. You just have to find a unique way to invest in the asset. Sometimes that's partnership, sometimes that's through equity, but we can make that happen for you. So speaking of real estate, this is something that got our founders into the alternative investment sphere, is investing their retirement funds in real estate. So real estate gives you a tangible asset that can also have investment income from that property. But there are a lot of different options for real estate. The most common is probably single family and multi-unit homes, but you can also do apartments and condos, commercial properties, unimproved land, trust deeds, and then you also have the option for leveraging, which is another option if you do not have the full amount for an investment. Say you want to buy a $100,000 home, which actually is probably low these days, but you can then put down 40% and work with a third-party lender to get a non-recourse loan to cover the full amount of the purchase property. And it would be the IRA taking the loan, not you as an individual. So how does your account grow with real estate? The most common way is through rental revenue, short term like Airbnb or other options like that. You can also do long term rentals where you have somebody renting your place for a year or two at a time. And then, of course, there's also appreciation, which comes from general market gains, or improving the land, such as developing raw land, fixing and flipping a distressed property, that sort of thing. Now, while real estate is an exciting asset category, it does have some restrictions. Because it is the IRA who owns the property, you cannot use the real estate assets personally, so you can't get a vacation home for yourself with your IRA. You are also prohibited from doing sweat equity on the property, which means things like repainting or replacing the windows. These things need to be done by a contractor that your IRA pays for. That said, you also have the option at any time to distribute the property, and then you can use it and improve it as you see fit. Now, given the value of some real estate investments, a lot of people do prefer to distribute a portion at a time. So you can take 10% of the property out and then do that every year for 10 years. And then once it's fully distributed, then you can use it however you see fit. Another option with real estate are real estate investment trusts or other private equity versions of real estate investing, which is what we'll get into next. Private equity options with a self-directed account through us involve private stock with a private company. You can do real estate investment trusts, as I just mentioned. You can do a pre-IPO investment. You can also do equity crowdfunding or purchase a stake in an LLC, a C Corp, LP, really anything. The cool thing about private equity is that because there are no public disclosure laws, you can use your own personal knowledge to help direct investments that might not be knowledgeable to the rest of the public. And you can also get in on the ground floor of something big. Think of how nice it would be to have purchased Facebook stock before that exploded, or any other company like that. And then your investment returns will be based on your agreement with the investment provider. Sometimes this is dividends, buyouts, selling after it goes public. So that'll be detailed in your subscription agreement when you make the investment. There are some things to consider with private equity as well. You cannot use a self-directed account to purchase equity in a business you run or have a controlling interest in. This also applies to a business owned or run by a disqualified person or entity, which we'll get into a little bit later. It is important to make sure that the entity in which you would like to invest will allow the ownership to be assigned or reassigned if you think it may convert, transfer, or distribute all or part of the IRA investment in the future. And again, these aren't limited to just IRAs, but that is our most common account type. Speaking of common, a very common asset with us is precious metals. With IRA, if you are skittish about the market and you want to put it into something more tangible, or just with what you think has a better track record, you can invest in precious metals. There are specific purity standards for precious metals with an IRA, with the exemption of American Eagles, thanks to an IRS exemption. But essentially, your IRA would buy gold or silver or platinum or palladium, and then you'll end up storing it in a depository most often. But you do get to choose how you want to do the investment. So with precious metals, the most common is, again, individual ownership, where your IRA just buys metals and then has those stored in a depository. However, you can also do allocated ownership, where your IRA purchases a fractional share of a larger bar that is then stored with the investment provider. Another option, if you want to do frequent trading, is an online trading platform, where your IRA essentially funds that trading, and then on that platform you can buy and sell metals as you see the market fluctuating. You can also do this with your individual ownership metals, but sometimes it is a little quicker with the online trading platforms, and they can be more conducive to day trading and that sort of thing. Speaking of inventories, all accounts owning precious metals have to keep those precious metals in a depository. The IRS prohibits you from keeping metals in your own personal possession because it is not your metals, it's your IRA's metals. And this is a list of the depositories that we work with and kind of where they're located all across the country, including one over in Ontario, Canada. And as part of your initial investment with precious metals, you will choose exactly what you want and where you want them stored. That includes where you purchase them from too. Again, we do not endorse or recommend any specific investment provider, so you find the company that you want to buy from. Another option that people don't often know about is private lending. Essentially, your IRA makes a loan to whoever it wants to, whether that's an individual home loan, a business startup loan, a business capital infusion, or even the purchase of an existing loan. And the great thing about private lending is that you get to choose the terms. You determine the interest rate, the repayment period. You can also choose if it is secured or unsecured. So if it's secured, that means you have some collateral on the loan, such as a deed of trust, a vehicle, something like that, that would be collectible if the loan were to default. And of course, you also choose who you loan to. Another interesting asset category is our checkbook IRA, or otherwise known as closely held LLC. Essentially, your IRA will open up an LLC that it then funds, and you get to have checkbook control over it to determine how your assets are invested. So you can use that to diversify with multiple different assets. You can use that to invest in things that we don't directly facilitate. And you also don't have to wait on us for approval or to process transactions. You get to have full control over almost everything. That said, because there's less custodial involvement, there's also a higher investor responsibility. There's a greater degree of flexibility, but there can also be more risk with this, particularly when it comes to doing a prohibited transaction, because we will not be able to see that and tell you not to do it. The way a checkbook LLC generally works is that you would first open and fund an IRA with us, and then you would work with an attorney most often to form the LLC, because that way they will pay for the startup costs and then you can reimburse them once it's funded. You do not want to use personal funds to set up the LLC, because that is a strict rule with the IRS where you cannot use personal funds for any IRA investment. And that does come back to real estate as well. For instance, you cannot use personal funds to pay for maintenance on your IRA held real estate property. And then there are also certain investments that can only be done through a checkbook IRA, such as foreign real estate, or if you wanted to use a depository for precious metals that we don't directly work with, you can do that through the checkbook IRA. The same thing goes with cryptocurrency. We do not directly facilitate that. However, it's not prohibited, so you can do that through the checkbook IRA. And then, of course, your investment returns will vary significantly based on what investments you're actually making in the LLC and the performance of those investments. With those major categories discussed, we also will not say that you're limited to those. There are a lot of unique investment opportunities, such as oil and mineral rights, timber, livestock, air and space, and vehicles. I always love to tell people how we have investors through our company that have one person has a car that they rent out using a car share app. Another person has a private jet that they rent to companies with their IRA. And so really the sky is the limit with your investment options. If you have an idea of something you want to do, talk to us and we'll see how we can make that happen. In addition, you are not limited to alternative assets. You can buy regular public stocks and bonds with a self-directed account through us as well. However, our focus is in alternative assets just because that's what we found we're lacking in other custodians. So with great independence does come a lot of responsibility. Because we empower you, we also, it's up to you to determine how you want your account invested. And that also means that it's up to you to determine the viability of an investment. You figure out what the rate of return is, if it makes financial sense. You also get to, so if something doesn't perform as well, that is on you as the one who directed the investment. So what we do always recommend is doing your due diligence with an investment. Do the research for both the investment type, rate of return, and the investment provider to make sure everything makes sense for your investments. And some things to remember are that with a self-directed IRA or other account, your account is the investor, not you personally. This is why you cannot personally reside in an IRA property. You cannot physically hold precious metals you purchase with a tax-deferred account. And that also means that your account pays all the expenses while receiving all the income. And once again, we are not an investment provider, so we do not offer any investments ourselves, we just facilitate. So something I brought up earlier that is important to understand is that the IRS has something they call disqualified persons that prevent you from investing with certain people. The easiest way to think about it is anybody in your linear family tree. So parents, children, grandchildren, grandparents, you cannot make investments or have them benefit from your investments until it is distributed. However, as we see in the other column, there are people who you might think would be disqualified who aren't. Your brothers and sisters are not disqualified, nor are aunts and uncles, cousins, or friends. So if you've got a buddy who wants to start a business and you've got money in your IRA that you want to loan them, that is something you can do. Or you can purchase a property with your IRA and rent that to your cousin. But so these are some of the options you have. And then prohibited transactions are mainly dealing with disqualified persons. So any investment you try and make with a prohibited party would be a prohibited transaction and can have tax consequences from the IRS. This is important to remember, especially when you're doing through a checkbook IRA, because while we do not fully vet any investment you make, we will ask you some questions when you're doing it through us to make sure that it passes at least the most basic scrutiny. So if you are ready to enjoy the benefits of a tax advantage account, you will get more freedom, more opportunity, have more options and more control. And so you can use that to just simply put everything into one investment you like, or have a much more diverse portfolio for your retirement accounts or other tax advantaged accounts. And if you are wondering how to get started, it's just a click away. Every account with us is started by completing our online application. It can only take about 15 minutes or less, and you just go to our website, NDTCO.com, and there will be a big orange button that says open an account, and that's the way to get started. You can also use the promo code webinar for waived account opening fees. Once you do open the account, that's when you'll get to work with somebody like myself to help you fund your account, choose your investments, although we simply help facilitate. So you'll tell us what you want to do, and then we will help you make that happen. And then we'll also help educate you on how to manage your account through our client portal. And just to briefly cover how you fund your account, funds can come from another retirement account via transfer or rollover. Transfer is when it's IRA to IRA. Rollover is an employer plan to an IRA. And these can either be direct or indirect. Some people will have a plan close and then the funds go into a reversal account, and then you have 60 days to get them back into an IRA, which is what we call an indirect rollover. And then you can also make contributions where you take money that you earned and put that into your retirement account for tax advantaged investing. Once your account with us is funded, then you direct your investments. Essentially, every investment requires a direction letter, which is done through your client portal. You'll select the appropriate asset category, and then some investments require some additional documentation, like private equity needs a subscription agreement. Precious metals will require you to place an order with the dealer you designate. Real estate will require a purchase agreement, mortgage documents if using leverage, and then private lending requires a promissory note and borrower acknowledgement. And of course, we will work with you through this process to help you get all that paperwork and make sure the investment goes smoothly. And again, everything in your New Direction account is managed through your client portal. It's how you initiate funding, upload documents, direct investments, manage asset sales and distributions, and you can view your account statements on demand to see how your account is performing. And so that wraps up for today. I know this was just a high-level overview, so if anybody has any specific questions, please put them in the chat and I will be happy to answer them. You can also visit ndtco.com for more information on different account types and asset types, sign up for future webinars. You can also view past webinars there. And then of course you can call us as well. We're available on the phones Monday through Friday, 8:30 to 5 o'clock Mountain Time. All right, elaborate on partial distribution of real estate, like retitling, splitting the costs of repairs, maintenance, needing to start personal tax return treatment for personally owned portion, etc. So essentially, when you are distributing a portion of a property, it kind of makes it into a new partnership. So like if your IRA was the full owner of the investment property, then when you take a distribution, you tell us how much you want to be retitled into your name, and then we will work with you to retitle that portion, and then you would pay taxes, assuming it's a pre-tax account, you would pay taxes on the amount being distributed, and then you would split, just like a partnership with real estate, you would split any fees or any taxes or any expenses for the property with whatever percentage is being owned by the IRA versus the individual. So if you distribute 10% one year, then any expenses are 90% IRA, 10% personal, and then that percentage would change as you continue to distribute more. So if somebody asked if they signed up for an account yesterday and did not know about the password webinar, can we waive the sign up fee? Can that be applied to today? I cannot answer that right away. I would have to check with my management, to be honest. Generally, the account application fee is non-refundable, but I will certainly look into that. And if you've already been in contact with one of my team, reach out to them. Let me see if I can see your name. Yeah, I would say either reach out to me after the webinar at extension 119 or whoever was reaching out to you already, and we'll be able to answer that. So I'm sorry, I don't have an answer right now. And we will give it a few more moments to see if any other questions pop up. Happy to answer anything. All right, since I'm not seeing any more questions, I will be closing the webinar for today. But if any new questions do come up, please feel free to reach out to us. We are always happy to talk to everybody and kind of see if we can make your plans work for you. Thank you all for attending, and I hope you have a wonderful day and a wonderful weekend.